I'm away from the computer, and this is actually one of those. I managed to join today actually when I'm in the car. So basically, let's get started.
Good, man. You enjoyed it, yeah.
Yeah, at least to use it.
At 3 a.m. in London. Good, man. This works out for you.
Oh well, it's daytime.
Yeah. Nice. Love the commitment.
Yeah.
All right, good. Yeah, this is the sim trade you guys were talking about that I was putting on earlier. Again, there's the entry off of the level. This is the 100 tick chart, footprint tick chart. The entry is right about there. That red arrow with the stop just above that price action. This was the primary target, and intermediate target got a little bit off there and another little bit to run down there. So the RVR was excellent, and this is exactly what I'm trying to achieve with footprint charts. Try to get very good entries with a tight stop, and so the RVR expands. This one worked out. This was a good example of it. But again, the key point is entries. If you start looking at taking partials, then I think it'll get more tricky, because let's say you enter here and the price goes down here and you see an imbalance, you start taking a partial. And then again here, and then again down here. So it's going to be looking at footprint charts for partials. I think you're going to end up diluting the position and more difficult to get those big RVRs. So primarily it's just for entries, nothing else. As far as picking levels to take profits at, that's the same old thing. 30-minute chart levels, nothing new. That's the trade we're talking about. The RVR is, I don't know, what is this, 30R, 50R, whatever. It's just huge. So that's the idea. Trade like this and you'll be okay. So every dollar you put in, you make $30, right? I think that's all right. This right here is the Euro USD futures Forex market. I got the alert that it bounced off that level, but just because it's bounced off doesn't mean it's a long. I think this is a 30-minute chart. It's making a bit of a descending wedge or a descending pennant. You can see these lower highs and higher lows. There's no way I'm going to go long or short, even though it got to the level. So that's the key, right? With levels, just telling you where to look at it rather than telling you long or short. So I'm gonna wait for this. Cool. All right. What's on your minds, guys? What do y'all want to discuss? Anything on your minds? Are you guys good? You know how to trade? Usual.
Yeah. What are these white ticks on the charts?
It's just decoration. Makes it look pretty. Nothing more.
Looks like Christmas.
Yeah. Yeah, I'll show you.
Okay. So these are the highest volume in that candlestick.
Yes, these are the footprint charts. So right here, the white highlight row is the highest number of highest volume at this price, and these are what's it, value area low and value area high. 70% of the volume during this candle happened within these white lines.
Okay,
that's all it tells you. And there's settings to change all that, but 70% is pretty standard. So yeah,
so if the candle,
go ahead.
If the candle is closed green, then you would expect that it is the more percentage of the trades are toward the higher numbers. So what other information does it give us? Is it, for instance, no, as a counter argument to what I just said, the two candles before this, we have 96, and it is green. So what does this mean? Does it mean that actually more trades are traded actually in the lower part, and what does it indicate?
Yeah, so exactly as you said. Firstly, don't expect that just because it's a green candle means all the volume happened near the top. That doesn't add up at all. Just look at where it actually happened. So yes, this 96 here is telling you that 96 transactions or volume happened here. So this is the lower part of the candle. And there were transactions, of course, at other parts of the candle. It's just that the majority of it happened here, right at this level, at this price. And then within these white lines that you got going across the candles, 70% of the entire volume happened here. So in this candle, it's telling you that a lot of the volume happened in the bottom half of this candle. What's interesting is when you get to look at it at a key level, and that's the time it gets interesting. So if you look at it here, I've got this white line here. This is a level. The price came down to it. You could see on this red candle, the majority of the volume happened here. It's even got this red highlight here, which is an imbalance. It's saying over here there was a massive imbalance between sellers and buyers. There were many more sellers than buyers right here. So that becomes an interesting point. And then as the price went lower here, you can see that there were a lot more transactions down here than in the rest of this candle, as well as with a green highlight. So there were a lot more buyers than sellers here. When you see more buyers than sellers, you should expect the price to go up typically. And there you go. So there's not an anomaly. This is just normal price action. When there's more buyers than sellers, it should go up. So, there's nothing I would trade here. This is just normal. And again, the majority of the volume happened here. So we can also get the clue here that this level is becoming interesting. It's a level that you planned to look at. So I looked at this from picking it up on the chart. But when the price actually gets to it, you watch how the price interacts with the level, how the buyers and sellers are behaving at this level. So you can see that that's happening here. In the next candle, you can see that the volume is higher up. So the price is moving up, generally speaking. Without looking at candlesticks, you can look at basically the tape over here. It's footprint charts. And you can get that clue. Here's your confirmation that the buyers are buying higher and higher. So that's the way I'm seeing it, basically. Just trying to see where these transactions are happening. And most importantly, I'm looking for these imbalances, these red highlights and green highlights, and looking for anomalies, which I don't see any in this case right here, so I wouldn't touch it. But yeah, that's how I'm using it.
This is very interesting. Is it on 30 minutes or on 1 minute?
I'm using it on a 100 tick. I'll show this to you here.
100 tick.
Yeah, this is a 30-minute chart, this one, with the footprint charts. And if you go into it at the level, you're getting the same information on the 30-minute candle. Let's get rid of this. So down here, let's look at it. As the price came down to the level, interacted with that level. This is interesting. You can see the price came down on 30-minute chart, and there's an imbalance near at the bottom right here, where there's more buyers than sellers. Right, so it's telling you there's something going on at this level. There's an imbalance. There was an imbalance even here just before it got to the level, and the price reacted. So this is on a 30-minute chart. You can use it on any time frame you like. I just like it with, I have it on a 30-minute, but really I'm focused in here on the 100 tick chart. This is where I'm trying to get a little more detailed so I can get those really tight entries. And that expands the RVR. If you're able to identify the price pattern over here, for example, that buyers are taking over and the price is going the other way, then you can get your entry around here. You stop right on the other side of the price action or on the other side of a buyer that you identify, and you get a good RVR. So that's what I'm trying to work on.
And does this also for other securities such as MES, MNQ, these things?
Yep, all of them. So I've got all these futures contracts here that I'm interested in, and I'm using tick charts on all of them. And I believe you can use them even on regular tickers, on Tesla and all that. I'm not sure. I think you can. I haven't looked at it. But yeah, over here on futures, yeah. And for futures, I like the tick chart. It's actually very interesting. I find it more interesting than the time charts.
Tick charts are the movement of price. So if it stays at some place, there's only one tick, and whenever it moves, it can move one time in a second, or it can move like once in 2 seconds. That will make just one tick, just one movement, right?
Yeah, pretty much. So think of it this way: the candle will close when it gets the appropriate number of ticks. So I've selected 100 ticks here. So when there's 100 ticks, basically call it 100 transactions, the candle will close. So yeah, time is irrelevant.
Does
Okay.
this make life easier
I think it's
in
easier
terms
because
of?
you're really looking at, you're making time irrelevant. You're not bothered about time. You're just focused in on transactions, the actual activity of buyers and sellers. That's what I'm most interested in. So every candle here is telling me what happened during those 100 transactions, and not during that 1 minute or 30 minutes or anything like that. It's a matter of buyers and sellers transacting. So you're really going away from time, which if you think about it a little bit, time has no relevance, no significance. It's just something to anchor you down, so you actually don't overtrade. That's why we use some sort of strategy. Pick a time frame that you like. Remember, I always told you guys, when you're using candlesticks on time frames, it doesn't matter what time frame you use. Just pick a candlestick pattern and stick to it. And the patterns look the same on all time frames. That's the fractal pattern thing. So, time is actually quite irrelevant. What's most important, what makes the market truly move, is buyers and sellers interacting with each other. Market orders, limit orders, all that. That's what I'm really trying to get into here, and identify when one side is taking over and ready to start moving the price. So you're able to get that with the tick charts and then overlaid on the footprint charts. So far, I think it's been very insightful, very interesting.
Yeah, can we look at a trade that I took today? I'd like to see what the footprint chart would have said. On N2K, and I entered at 940 after the 947 candle. I had a level at 2688.7.
2687. Where are we? 26. Oh, further up, huh? Oh, yeah, this was earlier in the day. 26.
2688.7.
Yeah. Okay. So you're right up in this area.
Mm-hmm.
Okay.
So it broke down, retested it at 947.
Okay. So in the first 30 minutes. All right. So this is the 30-minute chart to begin with. Yeah, this was an interesting level. You had support. You had resistance, consolidation, higher lows, breakout, and then came right through it at the open. All right. Now this 100 tick chart won't give me that information, but perhaps the 5-minute chart will work here.
But I guess do the 1 minute chart.
1 minute.
I don't know. I mean, footprint chart. I don't know if that will.
Yeah, let's see. So we're
That's
getting
where I entered.
You're up in this area. Okay. Let's zoom back on this. So that was up here. Yeah, looks like we're getting the footprint information up there. All right, 1 minute chart, and this is your area. So the open, it came down, bounced off again, higher lows with decent looking higher highs. Overall, though, it's just a consolidation. And you get the breakout, the retest, and you go short. So where about did you enter?
That kangaroo tail, whatever. Yep, right there. Yep, that's the candle right after it. Made the new low, entered. But I'm wondering what that candle shows. The one before that. Yeah, that one. I wonder what information it gave you.
Cool. Yeah, so as far as naked trading is concerned, that's a really neat setup. Breakdown, here's your retest. Perfect setup really for your short entries up down here, stop above it, and you go. But if you're using footprint charts, let's see if you could get a tighter entry. So to begin with, you're having, as it breaks out, you're getting this imbalance here. Lots of sellers, more than buyers. And then on the breakout, you can see, look at the volume here. All of the volume happened after it broke out, right? Below the support level. So that's a good sign for a genuine breakout. Then it goes up, and again, you're getting more sellers and buyers, and it pushes down right through. So that again, that's a good sign. And what's interesting is you see the low of this candle has lots of sellers. It actually moved up a touch. But as it came back down again and it broke those sellers, there was increased volume right about here. Again, everything is telling me that it's looking good to continue down. The sellers are in charge. Then over here again, you had sellers in charge, but this candle went up. So this is the point where you're thinking, all right, the breakout is pretty much complete. Now you're looking for the retest. So it goes up there. And here you have your retest where there's more buyers and sellers. And this is the anomaly point. If you're getting more buyers and sellers, the price should move up. But it doesn't. It actually goes, and this candle closes red, closes down here with the majority of the volume even happening here. So by the time this candle closes, you have your setup. It's basically the retest is complete with the imbalance, and that's the key point. That's where the confidence comes from to say that the sellers are truly in charge. And what you can do is here, perhaps just as soon as this candle closes, I would probably just enter. Or you can just wait for the new low and enter, which is more the naked trading stuff. So enter here with the stop up there. So as far as comparing your entry to what this chart shows us, I don't think you have a massively different entry.
Yeah.
This would be about the same. Not much
Now,
of a difference.
this is actually like, because you're talking about this maybe 5 minutes ago. This is like a perfect example of why time doesn't matter. And it's a couple candlelight sessions ago, I kept poking at you about this question, like, oh, do you want the candle to close exactly at the bottom of the can? Like the close has to be at the bottom of the candle. Like they can't have a wick right at the bottom.
Mhm.
But if
Yeah.
this candle maybe was, instead of 60 seconds, it was 62 seconds or something like that, 63 seconds, it would have closed at the bottom of the candle.
Yeah.
It's like, at that point, it's just like, is it that nitpicky that we have to wait for it to close where, you know, the candle at the low or at the high if you're going for the long? So yeah, that's it's just funny that I was just looking at that one because you talked about that like a couple minutes ago. But yeah, so pretty much we can just trade candles. We don't really need this stuff.
You can. I mean, you've seen me do that for years, right? Trade just time candlesticks, and it works. I just think you can get a lot more precise entries using tick charts with footprint charts. So if you consider these were just tick charts, not the 1 minute chart, we'd be looking more at specific volume areas. So the breakdown happened, and in these two candles right here, you're getting the tremendous amount of volume happening right up here. You can see it right here, both candles. So there's a lot of activity right here, right below the support, just outside of the breakout area. And then the next time it came up here, you have this imbalance. All these imbalances start printing. One thing I may try and do, and I think I did it with some other trades, is as soon as I notice the imbalance happening here and the anomaly, which is the price goes the other way, and it goes down below basically the volume area right about here. So as this candle goes up and starts coming down, starts printing these green ticks, these green highlights, starts going down, I may take an entry down in here, somewhere there, with the stop just above it, so it gets really tight. Now in this case, yes, if you're going to trade like that, you're going to get a much better entry. You can see the difference. The stop being up here, if you enter here, or you
It's
enter
half your
here,
risk. Yeah.
yeah, it's massive, right? Huge difference. So those are the kind of entries I'm trying to target. And so I'm not bothered about candles closing or anything like that. I'm really more bothered about where are these guys playing and how are they playing. The market orders versus the limit orders and how they're interacting with each other. And this becomes a key area right here, just below that horizontal line, just in this area. You can see it. The indication started here when the breakout happened. Right before it, there were a lot of sellers taking over. And sure enough, the breakout and all the volume happened there. Next candle, as it came up into that, all the sellers were still there. All the volume was still there. Next time it comes into that, you know what's going to happen, right? And this time you're getting an anomaly there. So now by the time it's here, I have a tremendous amount of confirmation that this thing wants to go. I might put on some heavy size just over here with the stop right there. It's a tight stop. So now your RVR is huge, and the tight stops allow for heavy sizes. And off you go. So yeah, that's It's a way to use it. You don't really need to wait for candles to close. Now with naked trading, yes, you should wait for the candles to close on whatever time frame you pick. That's the whole structure of it. This is completely different. The structure here is, again, market orders versus limit orders and how they're interacting with each other. That's the whole point. That's where you can get that.
Yeah, just a quick question. I feel dumb. In the fourth candle, you said that there's an anomaly, and you were expecting that actually most of basically trades to be appearing at the same location of the first two candles almost. And that actually confirms that it would go down, but it is actually other way around. And you're saying that this is a good short opportunity. Is that what you're saying? I still don't get that.
Yes. So take it very simply. In any marketplace, when you have more buyers and sellers, the price should go up. Right? Demand supply. Very simple. Or on the other side of it, if you have more sellers than buyers, the price should go down. Look at the real estate market. Look at any market. And so if you have when you have an anomaly, it's the other side of it. Like in this case, when you have more buyers and sellers, but the price actually goes down, not up, there's something very unusual going on here, right? That's an anomaly. So I'm looking for those anomalies. In this case, the anomalies are basically there's more buyers and sellers here. That's the market orders. But the reason it doesn't go up and continues down is because of all these limit orders sitting up here. They're not able to get absorbed. Again, that's the insides of it. But to put it very simply, when it doesn't behave the way it's supposed to, that's when you look at it. So when there's more buyers and sellers and the price goes down from a key level that you're interested in, that would get my attention. Or on the other side of it, when there's more sellers than buyers and the price does not go down, it goes up. Now you have an anomaly, and that's a key area to be interested in. So that's how I'm saying it.
Avi,
Yeah, but
the candle wasn't formed completely.
That's what I was going to say. Yes.
That could have changed from like buyers to like.
Yeah, on the
Could
1
change.
minute, but I think he uses the 100 tick or whatever. So.
Yes, exactly. So if you're using time charts, like this is a 1 minute chart, then yes, I'd suggest wait for the candle to close before you make your decisions. But on a tick chart, I'm not bothered about candles opening and closing, really, not too much. I'm more interested in how they're interacting. Over here, you can see they interacted at this level and here. And then when it came back to it a little bit later, and this could have been 2 minutes later, this could have been 1 hour later. I don't know. It could be anything depending on the pace of the market. I'm watching how they're interacting with each other. And really, when you're getting this, they're all stacked here. All this imbalance is all stacked with all these levels just previously. You can see where all the volume was. And what's odd also, look at this. You had an imbalance of more sellers than buyers, and now the imbalance of more buyers and sellers. So a tremendous amount of interest in this area, and it's all happening just below a bigger picture level, and a breakout just happened at that level. So it's all interesting. So during this time frame, you know, if this is 5 minutes or this is 30 minutes, this is where I'd be closely watching the activity. And then once I'm getting all that volume and all that interaction confirmation, the way the market orders and limit orders are interacting with each other, then I could take that entry. Don't have to wait for 30 minutes for this candle to close, or 5 minutes, or 3 minutes, or whatever it is. So again, that's one of the advantages of the head chart that I like. I'm just, again, watching these transactions. I would almost watch it without the candles even showing, and that would be even more interesting, right? Let's see if we can do that. Go to the current price action. And okay, this is not a level I have, so I'll remove it.
Yeah, that's how I originally thought it was. I never knew that there was a candle next to it.
Yeah, and you know, you can remove it. This one I have a 30-minute chart. I've played with that setting before. Let's find one where the price is close to a level. I don't have that here.
So when you say close to the level, we should already know where the level is, actually.
For now, that's how I'm doing it. I'm picking a level on a 30-minute chart, and I'm putting it on like right here. This is the Dow Jones, and you can see this.
Okay.
Let's change the settings and remove the candles. Here we go. Borders, wicks. Okay, no candles. Let's see if we can read this. So you know you have something going on down here. And what you're looking for again is anomalies and imbalances. So as the price comes from, oops, let's move this out of the way, from up to down, gets into this level, and you're beginning to see imbalances here before it even gets to the level. You have more sellers and buyers, and it moves down, and then it continues to have more sellers and buyers, but it starts to move up. Now, as it starts to move up, I'll get interested to see how it reacts with the heavy imbalance that was just there recently, just previously. So it gets there, seems like there were more buyers and sellers, but comes right back in. Again, the majority of the volume is right there. I'm drawn to the white lines here, the white highlights. So that's interesting. So again, here's your anomaly to begin with, because the price did go up and even found another imbalance up there. But you're interested in the previous imbalance. How does it interact? And then as you move forward, again, you're getting all these red prints happening, these red highlights happening, which is, again, more of that same imbalance, more sellers and buyers, and it should go down. But what you're seeing is there's a lot of activity above, right? So that's interesting. And so let's say you're still seeing this. You're seeing a lot of activity. These white rows are in the same place with an imbalance below it and another imbalance or more imbalances just above it. It's an odd one because really it should go down, but it's going up. Then when you see the white prints here, I think this is more like what I would do. When I see the white prints moving up, and this one really starts to get heavy. So you can see in this area, we had these 3 candles. All of that was in the same area, all the white highlights. And then it starts to print higher up, the white ones. Now it gets very interesting. This perhaps is where I might consider an entry, especially as it goes above the value area of the previous candle, volume area, sorry, high volume area. So perhaps in this area I would enter, and I would put my stop below the imbalance over there. So there you go, no candles. You're just trying to read how the market is interacting, how the market orders and limit orders are interacting with each other. So I don't know where these candles opened and closed. They're not on the chart. So I'm just trying to read them as they happen. And all you know is that every column here is 100 ticks, and it'll close with 100 ticks. And you can change that, of course. You have, where is it here? 1 tick, 10 ticks, 1,000, 100, whatever. For now, I'm just putting on 100. And there you go. Now, and 100 ticks at the open is incredibly fast. Now you try and watch the MES at the open, and you'll see, you know, within 1 minute, you have like 30 candles printed. Yeah, it's pretty fast. So if you want to trade the open, you might want to go to a 1,000 tick chart or something like that. And then this one worked. So again, the most important thing is the transactions or the interactions between buyers and sellers, markets and limit orders, more than where the candles open and close. You're looking at candles opening and closing using time candles. That's naked trading stuff. This is completely different. I think this is what's called order flow. Just a complicated word for saying buyers and sellers. It's a market. So there you go. Oh no, without candles. So for now, I'm using levels based on a bigger time frame. But there is that concept of just waiting to identify where there is an imbalance. And if you can identify that, you don't need the levels. Just wait for that imbalance to happen and watch how it interacts. Watch for that reversal activity. And then you find an opportunity that way. So you can get alerted when there's an imbalance. That's another way of doing it that I'm curious about. Let's see if we can do that. You might find an imbalance up here. You can see just zooming out, looking at this at the top, like all of these, you're getting green highlights, right? The price keeps going up. And here you're getting green highlights. It doesn't go up. And on the contrary, you're getting it coming down. And it's these white highlights right here. The majority of the volume seems to be happening there. And from there, it starts to drop with lots of red highlights, lots of sellers taking over. So first you had the imbalance, the anomaly, and then the sellers take over. So once you have that confirmation, it could be an entry there with the stop just above it someplace. You have something. You gotta identify where you want to put your stops. For now, I'm just using the imbalance areas for my stop. But you can see these opportunities are there. And this is a very small chart. This is 100 ticks, because I'm trying to identify tight entries. That's why I'm using it. But If you're just starting with this, you want to go slow. I suggest the tick chart much slower, much easier to read. What do we got here? Dennis, how do you differentiate between market and limit orders? Oh, man. Oliver, you want to take this one? How do you differentiate between market and limit orders? You've been using tick charts, right? Or footprint charts? No, Oliver's asleep. But,
I guess it is with the imbalance.
Yeah. Well, to put it very simply, let's just look at these charts and I'll try and explain it to you. Limit orders are what you see on the order book. Right, market orders you don't see on the order book on the level 2. You've all seen the level 2 before. Now, the thing about limit orders is what you see on those order books, you know that it gets spoofed all the time. The algos come and go before you can even see it. And you have big icebergs and spoof orders and all that manipulation. We've seen it a lot. That's why I don't trust the level 2 anymore. I used to. If you remember 2 years ago, I used to use it a lot. But it keeps changing. And so it's very hard to trust. So I don't bother with it. So that's limit orders. Basically, limit orders, think of it as the people or the hedge funds or the algos or whatever it is, they will wait for the price to come to them. They won't chase the price. And then they'll have that order filled. Market orders are orders that people just want to get into the market. Long or short, whatever it is, hit the button, whatever the price is, you get filled. Right? Simple enough. Hit the bid, hit the ask, and off you go. Now, when you're reading these charts here, what you're looking at, the way I'm seeing it, is every transaction is basically when the market order comes through, it hits the bid or the ask, right? In this case, let's say people are hitting the button to buy, then you have that market order hitting the ask, hitting the ask, right? So, and then once that transaction goes through, it gets printed here. That's what you see on the tape, right? When you hit the bid, it hit the ask, and the algos you'll see hit between the bid and the ask. That's a different world. So what you're really seeing on these charts is the end result of how the market orders interact with the limit orders. I'm not bothered about the limit orders before they're transacted. That's why I don't have the level 2. I'm not bothered. I don't have those rows down here, the heat map and all that stuff. I'm not looking at it. So what I'm looking at is once there's an absolute confirmation, like the order went through, it's done, both sides got filled, this limit seller and this market buyer, they got filled, then it prints over here. And that's what I'm interested in. And once you have that information, what is most insightful again to me is these anomalies. Here you can see there's more sellers than buyers. The price should move down. It did not. By more sellers than buyers here with these red highlights, I mean, here, I'll show you the setting. The highlight is here. There's 1,000% imbalance. Right, so I've just got it there. I think 300% is a normal setting. I've turned it to 1,000. I like it better. And so the imbalance. So just telling you more people, more sellers hit those market orders than buyers hit those market orders. And so it should go down, but it did not. In my theory of why it didn't go down is because the limit orders that was sitting here to buy were so heavy. There's so many that no matter how many market orders came in, and they just couldn't move the price down. On the contrary, it actually went the other way. So it's basically those limit players taking charge. And remember, the limit players are the patient guys. That's the big money, the smart money, the algos, the hedge funds, the whatever you want to call it.
Whales.
And so anomalies, yeah, whales, there you go. Whales, that's a good way to say it. Simple. And those are the anomalies I'm looking for. When basically the market players could not continue their agenda and could not overpower the limit players. And actually it goes the other way. That's the powerful point on the chart, that reversal point. So that's what I'm really looking for here, that anomaly and imbalance. And that's what I want to play with. I want to play with the whales, as in go along with the big money, the smart money, all that. So yeah, hope that explains it. I haven't found the right words to explain it cleanly, but that's how I'm seeing it so far. And simple enough. What was it? Oh yeah, trapped. There's a trapped sellers. That's a very common term used in the footprint chart world. where these sellers who are here, they get trapped because the price goes against them. Once you see trapped sellers here, you go that way, go long. On the other side, if you see trapped buyers, you're going short. So that's one other way to see it. These guys hit the market orders and sold, got filled, but the price is going against them. Once you see people getting trapped, now you go the other way, go with them. You're almost like beginning to think like a bit of a market maker. And that way you can get some really tight entries. It beats the hell out of waiting for a candlestick to close and enter on the new high, and then off you go. So that RVR just goes away when you do all that. Did that for years. Nothing wrong with it. It works. This is just more accurate. So I'm working on it. Hope that answers your question, Dennis. Let me know if you need more clarity on that. We do have quite a lot of guys in here in our group here who have a lot more experience with footprint charts than I do. I've only been looking at this for about a week, maybe 2 weeks. And so far, very interesting.
It's funny how when we like get a tight entry, how our 5 RVR trades convert into 10 RVRs.
Yeah, it's amazing, isn't it?
Yeah.
Really tremendous. Yeah.
We-
And it's, yeah. Yeah, go ahead, Lovely.
you take the entry like 20-30 cents up, like above your initial entry. It could be your 5 hours or 3 hours converted into 10 hours or 6 hours. You just double your RVR with the tight entries.
Yeah, absolutely. It's tremendous. And that's the key, guys. RVR, like I've been saying for you for years, and then I'll put it everywhere. The whole point is the license to print money really is an RVR, is your winners are bigger than your losers. I don't care what your strategy is. If you have RVR built into your strategy, you can't lose. You just can't lose. And I've said this many times, even before when I was helping with other groups of traders and all. I told them, okay, give me your strategy. I'll make it profitable. I don't care what your strategy is. Any strategy on any chart, time frame, whatever. I promise you I'll make it profitable in 1 quarter. Simply because I will only trade it with high RVR, 5-1 or something. That's it. So the strategy becomes irrelevant. This is the core point, the whole 80-20 of trading. You will have losers. That's a guarantee. And most likely you'll have losers heavier than your winners, as in more losers than winners, like a 20% win rate, for example. And that's expected. That's normal. So the only way, the absolute only way to make money in this business is to have winners bigger than your losers, significantly bigger. So asymmetry in every single trade. So you should do everything you can to make sure that you have tremendous RVR in your trades, in your trade book, in your entries and your targets. It's so important. And getting those tight entries, as Lovely was just saying now, that is what expands your RVR. And just look at this chart. Very simple example. You'll see if this is your target. Yes, I'm getting some feedback here, guys. If this is your target here, this 49,580, and your entries in this zone, let's say you enter here where you get these red dots. You enter here with a stop at the white line. Now your RVR going up to that target might be, I don't know, 3-1, let's say. But let's say you enter here, right where you get this white print with the stop below it. Right now this becomes, I don't know what, beyond 5R up here. So just on getting a tighter entry, that ratio improves tremendously. And you're getting better and better at securing your license to print money, truly. So whatever you can do to get good RVR, find a method and get good at it. Practice it and get good at it. That's what I'm doing right now. I'm just practicing this footprint chart stuff. I think it's very important. So, try and figure this one out. That's the only reason I'm really looking at footprint charts, is for the RVR. There's a bigger purpose here. Cool. All right, let's look at, this is oil, not going anywhere. Well, you can see just no candles here, just the 100 tick footprint chart. You see the imbalances here. Lots of buyers, big imbalance, unable to push forward, push upward. And well, instead the price is going down. So you have an anomaly. Something's going on up here at about 63 on the oil futures market. Was it $63 a barrel? Is that what this is? I don't know. But there you go. Down here, this is a bigger picture level I've had in mind. What happened here? Yeah, there's your imbalance. Lots of sellers in charge. Sure enough, the price goes down. As soon as it hits that level, imbalance, lots of sellers still there, but the price goes the other way. So there you go. Now, what's your confirmation to enter? You got to figure that one out. I'm looking more at how the price is interacting with the previous activity. So you have this white print, when it goes back up, how does it interact with that? Well, it puts in more volume above it. For me, that's pretty good confirmation. I may start entering up in here with a stop probably below the imbalance, and it goes in my favor. I quickly bring the stop in very quickly, and you're on your way. So that's one way to do it. There you go. What else is on your mind, guys? Footprint charts, RVR, all the good stuff.
Okay, based on this footprint chart, what is your idea about Dow Jones with the huge move today?
Dow Jones. All right, let's look at the Dow Jones. I've got a couple of levels here on the 30-minute chart of the Dow Jones. Let's bring that in. There we go. So we had, big bearish day, pull back and right back down to the bottom, and it's just sitting at the bottom there. So just looking at this 30-minute price action, there's no room to the left. It's just sitting there. So it got bearish, and there's support there, but doesn't mean it's going up just because there's support. It's just support. It's just sitting there. So right now, no room to the left. Let it do something. Let it break down, then look at it. Or if you want to identify this as a consolidation zone, let it break to the upside, and then look at it, get a retest going up. Either way, but just looking at this chart, there's nothing here. There's nothing to look at.
Okay, just in case, if it breaks down, are you waiting for the retest again with the footprint chart?
Yeah. But again, it's a different kind of way of reading the retest, right? I'm not waiting for a 1-minute candle to go and reject and print a bearish candle, then the new low, and that's your entry. That's all the 1-minute chart stuff. I'm not doing that. But the one with the footprint chart, again, I'm just looking at how the buyers and sellers are truly interacting with each other, and go from that.
By considering all of those things that you have before, like the room to the left and everything.
Yeah, market structure, basically. Yeah. So far, I'm still using that. I haven't moved away from it. So using bigger picture levels, and you're only looking at it when it gets to a level, and then you wanted to put in a decent pattern with room to the left, right? That's the basis of naked trading.
Okay.
I'm still using that. And then I'm using footprint charts to really get the entry. Right? So it's just adding on one layer, basically, adding on footprint charts just for the entry purpose. I'm not using them to find targets or anything like that. Like reading it, and if there's an imbalance that goes against me, then I'll take a partial off and all that. And I'm not doing that. That's too much over management or micromanagement.
Just use it for the entry, for precise entry.
That's what I'm doing. Yep. So again, my only purpose here is to improve the RVR, and then you make more money. So it's all about the entry on that. And that's an interesting point actually when it comes to RVR. With of course, as we just discussed, getting a good entry with a stop loss nearby, very close stop loss, your RVR expands tremendously. And one thing that you've seen me do differently in the past was with options. One of the things that I used to do to increase the RVR was actually go out of the money contracts, because then you're capturing the gamma as the underlying goes through the strike price, then the contract value accelerates tremendously. And so what would have been, let's say, a 5-hour trade, if I was just trading the underlying, ends up being closer to a 10-hour trade just because I took an out of the money contract. So that's a little trick I was using with options to go out of the money. Of course, it has its risks because it has to go quickly. Your timing has to be good. You can't afford to get in and wait for it to start moving. All those issues. So you have to basically identify momentum situations with those options contracts. You're not dealing with any of that here with futures contracts. So you got to find different ways to get good RVR. And my way here is simply just get those entries and the stop very close to the entry. So as close as possible to the levels that I'm interested. Yeah, and these footprint charts are very useful for that. So again, different instruments, different ways of dealing with them. Just got to get used to it. And again, that's why I'm trading very small and in the sim a lot these days, just to nail down these little things. Once they're nailed down, then the potential is just enormous. And I think futures are a lot of fun. The market's open 23 hours, and there's no time decay issues. There's no liquidity issues. That was the biggest problem I had. And there you go. Tick charts, footprint charts, everything's available. So you can really put on a trade with an excellent entry and then leave it to run for hours if it needs to run that long to get to your target. So here, for example, on the Dow Jones, if you identified this pre-market low as a key level, if you're getting that breakdown, then you zoom into a chart. Actually, even here, if you look at it on a 30-minute footprint chart, you can see get a bit of insight. And you can leave it to run. That's your pre-market low. And as the price comes down through it, you can see the volume increasing. I'm not talking about the overall candle volume. I'm talking about just here. You can see this increase, this bulge in volume right here. If you're able to identify the volume's increasing as it's breaking out, this is a 30-minute chart. You may get an entry perhaps, put a stop right above the level, basically your support zone. And if you need to leave it for a couple hours, how many hours did that take to get there, close to that level, to take your profits? Probably 5 hours. No big deal. And you don't have to watch it. With an options trade like this, there's no way I would be in it for 5 hours and not look at it because of the time decay issues and all that. But in this case, you don't have that problem. Just get in and leave it. The entry would be here, the stop somewhere up here, and off you go. Of course, I don't enter on 30-minute charts, but you can see the potential here. You're not worried about time. So your work is really done once you found your entry. And for me, after the entry, once I've de-risked it, as I move the stop in towards break even as it goes in your favor, then just let it be, go for the target. And I'm not going to sit here and watch it. I'll go do other things. Go to the gym, go to the beach, do whatever. And I think that's a good way to go. So at this point, it's hardly even day trading. It's beyond day trading because it's really a perpetually open market. 23 hours, it's basically always open. So it's hard to even call it day trading anymore. But yeah, these are the fun things to work with. Really expand your trading, upgrade your trading.
Is there any difference between the buyer volume or seller volume in this area that you mentioned before in Dow Jones?
Up here, this breakdown?
Yeah. Exactly here, yeah.
All right, let's look at it. This is a 30-minute chart. So let's see what insight we can get just from a 30-minute chart. Sorry, let's zoom out, put the level where we need it. It's right about there. That's your support that it breaks down through. Man, the zoom feature is a little funky on this chart. Anyways, buyer volume,
little, advice, whatever. Just double click on the price column on the right side. Yeah, if you double click on it, it shows you everything. Right. And now if you scroll to the left or drag it to the left, it'll show you every single candle. So now it's fixed on those.
Oh, okay. Fixates on the candle. Oh dear.
Yeah.
Okay. Cool. So, I see it. Okay. Oh wow. Thanks, man. Like I said, you got to give us a webinar on how to use this damn platform. I can't figure this out. This is just a nuisance. Gotta do this.
And I told you if you hold control and then use your scroll on your mouse, but you don't like that one.
Oh, right now I'm just not used to it. No muscle memory with that. Thanks. There we go, guys. That works.
You look like my dad trying to figure out how to use technology.
Oh, gosh, now I'll be that. Thank you. Yeah, I'm a bit like that. I'm really not well versed on technology. I just kind of throw it on the chart. This is a web-based thing either. It's not even an app or anything. It's just silly. But thank you. Appreciate it. All right, you're talking about buyer volume, seller volume up here, Saber. So I have adjusted it where I'm just seeing the overall volume, all these blue rows here. I have moved it away from showing buyer and seller volume. You can do it where you can see all the volume. There's settings and what was it? Color file. Where did I change it? display, profile display, type, yeah, total volume. You can go to buy and sell. Now, buyer volume, seller volume. You can see that. I didn't find this very useful. So you're trying to decipher who was more in charge and all that. Overall, the more volume was here, but this is telling you all the market orders. Basically, there's a lot of guys trying to sell, and even more here. Over here, a lot of guys trying to buy. Much more than up there, right? So you can change the setting. But when I see this again, my eyes go to where's the anomaly? Where's the imbalance? Right here. This is an imbalance. Many more buyers than sellers. And it should push up if that's the case, but it did not. It got going down, right? And as it got going down through our support level, break down through it, massive volume coming in right below the level. That's my key point. And this is a 30-minute candle. So as you're watching this go down, it doesn't just go down. It's probably going to hang around here for 15, 20 minutes, go up, retest, whatever. All that's happening in this area. And if you're sitting here and observing it, reject this level 1 or 2 or 3 times just while this candle is forming, you have something to work with. And let's see, going up here, you can see a bit of an imbalance here. The seller's taking over. They were in the same place just previously. So that's a key point. So if you're able to find your entry in this area, perhaps your stop is here. You can go with that. If you're conservative, you can go up here. Or you can just go above this high volume zone, right up here, as the price is sitting down there. And then you're on your way. So yeah, you can see the buyer and seller volume. I just found this to be too much noise. I don't need it. I don't need all this information. But there's many different settings on this to work with. The numbers come in here. The more you zoom in, you can see all the numbers. Another setting that I played with was the volume delta. And that's what a lot of people like. Where is it? Buy and sell here. Instead of all buy and sell, just delta. So instead of trying to look at buyers and sellers, again, this is just telling you overall, subtraction between buyers and sellers, and you get the difference. So again, you're seeing that imbalance all there. It's color coded. You can see who's really in charge. Many more sellers here than buyers. Many more buyers here than sellers. Massive imbalance. You're getting the little green highlight in that area as well. So you can play with these settings and see what works for you. Again, you know my style. I just go with the 80-20. I want the minimal amount of information to look at. The more information I look at, the more confused I will get with my trading. I'd rather have conviction on a couple of things that I really need to see. And when I just see that and it's right there and it's just staring at me, that's when I can put on a trade. So I don't like all the colors and stuff. And oh yeah, at the bottom of these candles, there's the info box. Let's see here. Let's go into here. Let's do this. Go all the way out and put it on a smaller time frame. You can see this in more detail. There you go. So this is a 1-minute chart. Man, Omar, I'm gonna need you to really do this webinar, man. I'm totally lost with this. Yeah,
You're doing great, man. You just scroll and you scroll and you click up things and things pop up on the screen.
It pops out. My mouse hates me right now. It's just like I'm throwing it around everywhere. And this thing's, I got this like 8 years ago. It's still there. Anyway, yeah, so below all these candles, you're getting the information box with this information delta, total buy, total sell. So it's all there. I'm not really using this information at the moment, but it's there. So again, guys, you can play with these settings and figure out what information truly makes sense to you and what other information is just, it looks pretty on your screen, but it's not helping you trading. Remove that. Again, 80-20, really 80-20. Having all these colors left and right, I don't need all that. That's noise. Because I'm more interested in how did, see, as you can see, the price just move up, and now it's going to go into this area where there was heavy volume. How's it going to interact with that? Does it volume come in and it pushes through, or does it firmly reject that the seller's really there? In which case, you're ending up with lower highs. I'm more interested in these things than every single tick and every single buyer and seller. That's why I changed the settings. There's plenty of settings to work with.
And by using those blue one that you used before, how do you
Mhm.
realize who is in control, buyer or seller?
Well, that's the beauty of it, right? This is where the real fun part. I'm glad you asked this, because you got to understand that 95% of trading is don't touch the market. And if you're unable to decide who's in control, buyers or sellers, then don't touch it. Little psychological trick on its own, where if you can't clearly simply see who's in charge, don't touch it. Just leave it alone. The blue is only telling me the overall total volume.
No,
Not
no.
telling me.
I mean your previous setting.
Yeah, that's this right here. This is the blue setting. I just turned it back on. Here, setting, and go to the, what was it here? Total. This is what I'm using. Total.
Mhm.
Not buy and sell and delta. What I showed you guys. I'm just using this. Yeah. So with this, as you said, you don't know exactly. You don't know until you get the anomaly. And I want the anomaly. I want my eyes to go straight into where there's a problem in the market, where things are unusual, which is down here. I'm not bothered about buyers and sellers up here at the moment. This is not so interesting. It's these anomalies. That's the first thing I need to know. Is there an anomaly at the key level that I'm interested in? If I had a level down here, price came down here, no anomalies here, so I'm not interested. Well, actually, there's, you see these, there's sellers here, so that's interesting. But and it pushed lower a bit, so nothing unusual. It's not an anomaly. It's an imbalance that made sense. It comes back again. Again, you get that imbalance right here. These red highlights. But in this case, I can see it's pushed up. So now you have an anomaly. It didn't go down as it should when you have more sellers. Actually, it's gone up. And as it goes up, then I'm interested in how is it interacting with price action just overhead. In this case, you can see this level right here is interesting. This is where last time went up, it shot down. How did it interact this time with these white prints, with the big volume over here? Sure enough, it just pushed right through it. Well, that's interesting. And when it pushes right through it, I want to see an imbalance here as well. I want to see more buyers in the market, many more than sellers coming in. It didn't really come in here. They came in just above. So it's there. That's not truly convincing. That's what I'm really looking at, these imbalances. I don't want to get caught up in every single tick and transaction and every single market order and limit order. That doesn't add up to me. That's just too much work and not much reward for that work. So again, this chart has a lot of settings and a lot of information. You just really gotta, I don't know, figure out what makes sense to you. To me, these imbalances, these extreme points, that's what I'm interested in. And then the little confirmation of the move. In this case, it's going, and that's that. I don't want to know about every little detail. The imbalances are what's got my attention. I want to see an imbalance between buyers and sellers. That's what makes the market move, right? Over here, you're getting these imbalances now, more buyers and sellers. You can see that as it pushed up through this just tiny bit of resistance. And it's going to land up here. Let's see how it reacts with that overhead resistance up here and up here as well. But this is good. This is normal. You should have an imbalance of buyers, more buyers and sellers, and it moves up. So this is healthy activity, nothing unusual. The unusual activity happened over here. As you saw the imbalance, I went the other way. So that's why I get interested to put on some risk. And then you can just get the confirmation moving up. So yeah, there you go. Footprint charts, huh?
And are you trying this just as sim now?
Am I fine with trading in the simulator?
No. Just are you using the footprint in sim now, or no?
Yes. Yeah. Sim. This is all sim trading for now. Yeah, I've got NinjaTrader linked up. It's a demo account, or we call it a sim account. And that's it. While I'm exploring the stuff, putting on sim trades, seeing if I can get into good positions. And so far, it's been really great. I'm able to get into some excellent entries, and the position goes in my favor very quickly after my entry, which is great because then you can de-risk quickly, right? Before even thinking about profits or partials, you can move your stop in towards your break even, and then you're risk free. That's the first thing to do. That's the 80-20 of trading, right? Manage your risk. And then there's the other side of it, manage your profits, the reward side. So I'm just working those things out. I like it so far. It's been really fun, really insightful.
I have missed actually part of the discussion because basically I think I lost the reception. How could we find actually these attributes?
Sorry, define which attributes?
Yeah, the plots that you're plotting basically the sellers and buyers. So how can I find these? So is it like an attribute? Is it like an indicator or something?
No. Like I was saying, I'm just looking at imbalances, anomalies.
No, I think
Anomaly
he's
is very-
asking. I think he's asking where can you find this in TradingView?
Oh, this chart, footprint charts. Okay. Yeah. So you go into here where you can select the time of your
I
charts.
think you
can
have to
select-
have also you have to have the premium version, right? First, or
Yes. For footprints, you got to have
Yes.
the premium. I think for tick charts, you need the ultimate. I think it is. Gosh, I keep getting confused. I don't
Yeah,
know.
you need ultimate for ticks.
The
Yeah.
ticks, right? Yeah.
Premium
get the
is
ult-
for footprints. You can have premium for footprints.
Okay. There we go. Thanks, guys.
Is that premium footprints? Is that what it's called? Can someone
Correct.
please take a snapshot and put it in the general so we can find these, because there are usually many. Oh right, so that's
Not
it's
indicators. But
integrated.
yeah, footprint.
All right.
All
Okay, I got it.
different
I thought this
sorry.
is a third party indicator.
Oh no.
Okay, got it. Thank you.
Too many people with too much time on their hands go and create all these things on TradingView. Don't get lost in that marketplace, man. Unless they can prove to me they made $10 million every couple of months using that indicator, then maybe I'll pay attention to it. But no, not on TradingView, not all that, the whole marketplace. It's a big mess. Mostly they're not real traders. So be careful with that. But yeah, you need those premium and ultimate subscriptions to get footprint charts and tick charts. Basically what I'm using here. There you go. Look at that, another anomaly. The price moved up, lots of buyers. We were just looking at this, which was normal until it didn't go up anymore. With all the buyers, imbalance of more buyers and sellers, it failed to continue up. Instead, it's pushing downwards. So now you got something to look at. Of course, I only want to see this at key levels. This is no level for me. It's just a 1 minute chart. So, fun, huh? Fun stuff. Again, whatever you can do to incorporate higher and higher RVR in your trading, I recommend you go and do it. And then your trading gets bigger and better. And that's the whole point of what I'm doing here. But we had some good moves through the day, huh? Very bearish day, but massive moves. Fun stuff. There you go. Winston got some info here. Tick data for Pro. Okay. Again, guys, I'm just using TradingView for now. If I find a better platform, I'll switch to it. No big deal. But there are plenty of other platforms out there that provide footprint charts and tick charts, and I'll just look around the internet a little bit, a little Google search or AI search, if you will, and you'll be all right. It doesn't take very long, maybe 10 minutes. You figure it out. And gold was fun, huh? Big drop. Higher lows, double bottom sort of thing. Sitting at this level now. It's gonna be fun later. Silver futures. What happened with it? Let's see, it's still loading. There we go. Oh man, look at that. I had a level down there, huh? Didn't even know. Silver dropped, slammed into that level. Oh, let's see if we can see what happened down there. Again, I've got these 100 tick charts without, oops, what am I doing here? Without the candles on it. There we go. There you go. See, Omar, you told me how to do this, and I'm already lost. There we go. Okay, got it. So the price came from up to down, hit a key level. Let's see what would have given you an indication for the reversal. Okay, what am I doing? Quite simply, again, lots of selling, lots of imbalance selling, more selling than buying. Right there, it slams into the level. It failed to continue down. It pushes up, and as it starts to interact with the previous high volume zones, that's the first one. Now that's where I would get interested. So came down, volume happened there, and then volume jumped up there. That's interesting. Oh, see over here, all these white prints. With white highlights, that's a high volume area. Buyers came and buyers continued. So there you go. You may find an entry perhaps in this area. The next candle also came down, so we can wait for it to go and come back into that zone. Put in an anomaly, you can see more sellers than buyers, and off you go. And when I'm using stops, I'm trying to put my stops on the other side of anomalies. So this is the big one that I identified for this move, so put the stop down there. If you're getting another one down here, right? So if you're getting your entry in this zone, you can put a stop right there, perhaps. Nothing wrong with that. And off you go. And this thing just, yeah, it's on its way. And this is silver futures, guys. Silver is the most wild contract I've ever seen. The most leveraged. And when it moves, oh my goodness, it moves. So take it easy with this. Again, RVR stuff, guys. If you're entering here and stop right below it, like I was saying, just looking at resistance right there, that would be a target zone. That's huge. That's 10 to 1 already. And it's not a big move at all. It's not massive. It's hardly, what, 2 points? Something like that. You look at a 30-minute chart here. I mean, you're going from here to where? 75. Yeah, something like this. Just this little zone. Catching the reversal and getting up to this area. It's so insanely tiny. But because of the RVR, you can put on a heavy size and get it. And the fun really happens when you catch a reversal like this. And your target's up in this zone. Now you're talking really big trades. Huge trades. Much bigger than anything I could find in the options market. The fun thing also is when you look at the options market, let's say you get in here, and even if you get in out of the money, you take a strike that's up here, your target's up there. By the time it gets to the strike here, there's lots of liquidity. But then by the time it gets to your target, there's no liquidity left. And you can't even hold it until there. So you're basically, just by trading options, you're limited in these problems. So these are the problems you don't get with futures, which I like. You know, I don't want to face liquidity problems again. That's just worthless. Just spoils your trading. So lots of fun. Yeah, well, you're welcome. No problem at all. Oh, Winston, what do you got here? Don't you sharpen your entry by watching delta relative to minimum maximum delta from working? No. Winston, man, what you wrote here is already too complicated. Just reading it, it's confusing. Man, my brain hurts. Very simple, you know. I've had this rule for a while when it comes to trading or finding entries. If it takes me more than 5 seconds to figure out, that's it. It's too complicated. I don't want it. I'm not going to do it because it's not 80-20 anymore, right? And most likely you're going to just get paralyzed with too much analysis. So forget about it, man. I've been through that. I don't want to do it. Looking at relative delta and stuff. You know, yeah, buyers and sellers, buyers and sellers, buyers and sellers. That's it. That makes the market move, right? Why do you want to do more work than you have to? Well, I know why, because you're all from the corporate world, right? All of you make things more complicated. We had a great little picture in our Discord in one of the channels yesterday. This is the dog went and chased a squirrel, and that's all there was. But if you go and look how it was written up, the report of how it was chased and the results and the consequences and everything, that's the corporate world, right? The rat race, the rubbish, the fluff. That's the yeah, you don't want to do stuff like that over here. You're here to trade, just trade. Simple enough. What do you got here, Zach? FYI, if you start throwing 100 contracts at points of inflection imbalances, you will become imbalanced. You will become the imbalance. Oh no. That's a problem I'm trying to avoid, Zach. That became a problem in the options world, right? That became the market. Oof. Well, let's see. I'll solve that problem when I get there. Good problem to have. Oh my gosh. At some point, you just can't grow anymore because the market's not big enough. Well, that's the options market. Here, we'll see. Hopefully, not a big deal. Oof. But scaling in works. I don't mind doing that. I can do that here. That's one way to get around the liquidity issues. Anyways, guys, we have Zach in here in our group. He joined us just recently, and he's got a tremendous amount of experience with footprint charts. Been using it for years. So I will ask you to direct your questions to him, not to me. Do you
Hi,
mind, Zach?
everyone. Yeah, how's it going, Avi?
All good, man. How you doing?
Doing good. Just playing some video games, listening to you guys chat. Have a good time.
Perfect. Video games are great. Keeps you away from overtrading.
Yeah, someone earlier we were speaking to in the Discord was playing, and I'm like, I haven't played video games in a long time. That'd be a great way to de-stress a little.
I love it. Yeah. He got me interested too.
The
Flying
issue is I'm
airplane.
so competitive, I'm kind of stressing out over the video game now.
You show up at our happy hour and we'll play. We'll see. We'll knock the competitive out of you. I promise. You can have fun. We'll play poker and everything. It's
But
good
yeah,
time. We've done
the point of inflection thing I was talking about.
Yeah.
If you get really good at defining imbalances, which I'm sure you will, you're just naturally a high performer. Like we always talk about the push and pull, the war, the mini wars that are going on at reversal points. It's the buyers versus the sellers. If you throw enough contracts, you become the buyer or the seller that's causing the inflection. And I could definitely see you doing that.
Oh my gosh. All right. Well, hope I don't do that, but yeah. At that point, I'll open a brokerage or something. And there's no point being a trader. So, but yeah, you could do that. You could become the imbalance. I mean, if you read about Jesse Livermore's work, he used to manipulate the market in funny ways like that, test it, see if it moves, and then to push it from there. Basically, a market maker. So, yeah, that's interesting. That's why you trade high volume contracts, right? So you can get lost within the market. I don't want to be seen in the market because once you are the whale, then it becomes a problem. I'd rather not be that. Anyways, good to know. Thanks, Zach. You have totally devastated all my futures trading dreams.
Well, that's what I'm here for.
Love it. Thank you. Oh, man. Where did I lose the price action? I'm trying to figure out something right here on this chart. Hold on. Where did it? Oh, man, I've lost it. Where's the price action? Did you say you got to double click on the price? Is that right? On the, oops, auto fit lock. Totally lost it. What happened here? Anyways, what I was trying to figure out was with these entries, if you're getting that entry down here, and the target is on a 30-minute chart, probably up here and here. This is 20R, man. Just here, just going from one end to the other in the chop. It's pretty large. Cool. Reset the chart. Winston, how do you reset the chart? And these charts are just, ugh. Gotta figure all this out. How do you reset? How do you hit this auto button? How do you reset? Right click. Right click. Now what? Reset. Oh, there we go. Ah, magic. Thank you. You guys got all kinds of tricks. All right, so this is what I was trying to see. All right, you can't even see it here. Let's put those candles back on that way we can see it. What do we have? Wicks and borders. There we go. Okay. So we're talking about that entry down here with that reversal. Let's see, you get a late entry and you enter here perhaps with a stop down there. Just going up to where it is now, which is on a 30-minute chart, that's a resistance zone. That's pretty big already. It's probably 10 to 1. So that's the whole thing about not managing the trade. Once you enter, you don't try and take partials. You just have major targets in mind. So I would put it probably there on 30-minute, pretty much where it is now, and then further up over here in this area. And that's it. Don't manage it. Your job is done after you take the entry, a good entry with a good stop in place, and that's it. Yes, and don't become the market maker. Not yet.
What's your plan for how you're going to be trimming out of these positions? Are you going to be doing it relative to the smaller setup that you're getting in, or are you holding the core for the larger, higher time frame move you're going with?
Yeah, so what I like to do is pick a major target, and usually that's on a higher time frame. So if I was catching the reversal here, I'd look to the left and find where was a real big point of resistance, and I see it right about there. Right there, basically where the price is now, where it came down, pushed up, and then straight down from there. So I'd probably put 75% of the position or 80% of the position to go off over here. And then the rest up in this area. Just stagger out 5% at a time, somewhere up here. And if I'm watching it in this area, I might recycle that. Again, the stop loss or the break even would be down here. If I'm recycling up here, I can add back in such that the new break even is just below the price action. And that way you basically are into literally a new trade of the same size without any risk. So that's most likely how I would do it. That's how I've always done these trades before, without the option stuff. That's the way to do it. With the option stuff, I still did always have a target in mind, but if it got choppy along the way, I would start taking it off. But with this, yeah, you can hold for big targets, and that's one of the big advantages of not having time decay.
Maybe how did he get that white line level?
This one?
Yeah.
This is, I'm just manually finding levels on a 30-minute chart. I don't know, where did I get this from? Here, I think.
Okay. So those old bottoms.
Yeah. Yep. It's a turnaround point, and then I don't think I moved it from there. I don't remember. But anyways, yeah. Pretty obvious place, right? You can see it keeps bouncing off it.
Yep.
And so far, yeah, reinforced. So for now, I'm still using these 30-minute chart levels, but like I said, I'm interested to see if there's a way to identify imbalances without levels. So for example, the price went down here. I don't have a level down here, but if I was able to identify an imbalance here, maybe set up some sort of alert or something, then watch it and maybe catch the long from here. Now you got something. If I did catch that, then I would target probably this area and this area for targets, which would be huge, right? This would have taken, I don't know, 10 hours to go or something. Or how about a short up here? It's not close enough to one of my levels for me to put it on, but if you're trading a different way where you're not looking at levels, you're just looking at getting alerted when there's a massive turnaround in the market, when an imbalance of sellers coming in, then perhaps a short here, and this looks like it took about 20 hours to go. So these are big trades. These are huge. And again, it's hard to even call these day trades. This is beyond day trading. Day trading is only for amateurs, man. Come on. You guys got to step up.
Come on, Ivy, you have to leave something on the table as well. You can't just take every move.
Yeah, I can't help it, man. I can't help it. There's so many moves. There's such an abundance here. It's such a gold mine. Just gotta
Hilarious.
find a way.
It's hilarious that the guy that was doing 200K a day trading is now saying day trading is for amateurs.
Well, I got limited at about 200K a day. I don't like limitations. Think of it that way. Yeah, scaling becomes an issue, you know. 200K a day, and if you put that into percentages, you run into, you don't exactly become a $1 billion trader. You can't trade a $1 billion account. You can't even use a $100 million account. It's too big. It's too big for day trading.
Yeah, definitely.
So, yeah, you're way limited. So let's see the futures market. There's a lot more trillions sloshing around in the futures market than any other market, other than maybe Forex. So you got to deploy your cash effectively, efficiently.
The issue with Forex is that a lot of it is uncentralized exchanges, so you don't get data like you do with futures, which is centralized to CME and CBOT and that type of stuff.
Mm-hmm. Yeah, I read about that too. So you get a lot of strange prices and manipulation, and the big bankers, basically, they're playing that game.
Yeah, exactly.
So, yeah, it's one of the reasons I haven't dug into it. So let's see. But it is the most liquid exchange out there. It's the most liquid market, I was just saying, that I
Yeah.
know of. Forex.
I was gonna say it's gonna get even more liquid because I'm not sure if you've heard, but I think it's this summer they're releasing single stock futures. So there's gonna be futures contracts for Nvidia and Tesla, and we're gonna have some fun.
Oh my goodness. Yeah, I saw that. Someone shared it yesterday, I think. Is that really happening this summer already?
I believe it is this summer, yes.
Oh my goodness. All right, that's it, guys. We're going back to the Mag 7. Back to trading that nonsense. I wonder how the liquidity will work out on those compared to, let's say, the oil market, the oil futures. That'll be interesting to see. It's something good to keep an eye on, right? You have a 23-hour market for something like Tesla with massive liquidity and leverage that futures offers, then you got something. You may have something huge. Anyways, here I've got the futures, the Forex contract here, the Euro and USD terms. And this is futures. This is not trading Forex. It's just trading futures on Forex. And I'm just looking at it. I put levels on that make sense. Let's see what happens. This could be fun. And so far, yeah, came down one level to the next, putting in lower highs. Looks like it's getting ready for a breakdown. Yeah, let's see if it gets down there. I'll get alerted, and we'll find out what happens. And the one that I find also interesting is this one. This is Bitcoin futures that I've been looking at. And we know Bitcoin sometimes when it wants to go, it really goes. So wait for that key levels and then let it rip. So it's close to a level now. Let's see. It's not always on the move, but when it is, it's good.
Yeah, when I feel like a degenerate, I trade crypto on the weekends, but
Crypto. Don't trade crypto.
I trade really small size with crypto, really small size. I just do it because I'm a degen.
Oh my god. Well, when you're in that mood, go play poker or something. Do something that satisfies your gambling itch without going into the financial markets. You don't want the financial markets to be your place of gambling.
Yeah.
Yeah. Come play poker with us. We do it all the time. Well, on Fridays
Okay.
usually. We do stuff like that. You gotta get it out. You gotta get all of it out.
You were talking about Forex. I also trade Forex, but I don't day trade it. I swing trade it. And the concepts that I use are very similar to the concepts that you teach. However, they're slightly tuned to the Forex market in the sense that those markets are less based on price discovery, aka they're not searching for new prices. They're just regurgitating the same ranges over and over and over again. So it's just, I'm just playing like range reversals. I can send you a screenshot of a trade I just got into a couple days ago. Where can I share a screenshot here?
Share it in our screenshots channel.
In the Discord?
Yeah.
In
that way
the
I'll
trade
see it.
screenshot? Okay.
Yep, that's it. We can all see it in there.
So you can see that's the weekly chart of Euro USD. And
yep, I see it.
And what I do is I just play those inflections and I play back into the range with those inflections because, these Forex markets, Forex tends to be more stable. So it's just cycling around the same prices. So I'll just play back into the thing. Like I rode the trade from like 104 all the way to like 115, 116 where I got trailed out. And I just shorted a couple days ago up here and probably hold it for a couple weeks. It's not stuff I actively think about. I just put it on and then an alert tells me if I made money or not.
I see. Oh, that's great. That's a good way to go. You have the swing trading mindset, and also you have an understanding of how this market works. It tends to be more range bound. They don't have to discover prices. And yeah, you can just put it on. You got a method that keeps you detached. That's good. Put it on and leave it.
Yep.
Perfect. It's a good mindset. You got something going here that you can really build on. Good. I love it. Let's see. Maybe Forex is next for all of us. You're gonna teach us how to do this.
Oh no, I'm not trying to give you any more ideas, man.
Yeah, don't give me ideas. You know what I'll do, right? I'll jump right into it. Very nice. This is good though. I like this. The weekly chart, so it's really slow. You don't have to watch it. Love it. Thanks for sharing that. Cool. All right. So, anyone else got anything else you would like to discuss? For me, it's Friday morning, and so it's the weekend. I'm not too bothered about trading. So later today, we got a couple of sessions. Let me see. Look at the calendar. Where am I looking? We got the New York Open. Jill will be there as long as his computer works today. And we got Brian, who's going to trade at 1 p.m. today. He'll be sharing his screen. He's got a totally different perspective on things. And we roll into happy hour from there. I'll be around probably a little before Brian comes on at noon. I'll be out most of the day today. I should be back before Brian gets on. So I'll be around in our rooms. And yeah, so that's the plan for today. By today, I mean Friday. Yeah, it's Friday already for me. So there we go. An active day with our group. Fun. You guys take a look at our calendar if you're getting lost, because we have a few different things going on. So look at our calendar and put those notifications on so you don't miss it. Otherwise, you're going to message me again. Hey, where are you? Where do we go? What are we doing? Don't do that. All good. All right. So if everyone's good, satisfied, got nothing else to discuss, it's time to sunrise. It's past sunrise. Time to go to the beach now. Good.
All right, Avi, take care.
All right. Thanks a lot, guys. This has been fun. We'll get the recording up soon. Y'all take it easy, and I'll talk to you soon. Thanks a lot, guys. See you.
Thanks. Cheers.
See you later.
Sure.
Thank you.
Sure. See you guys.